How is everyone doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be reviewing the Conference of State Bank Supervisors annual survey on community banks, basically just taking a look at how are community banks performing, what do they see as big risks in the market, and what are their main concerns. So we're going to take a look at this report, and this is a report that I look forward to every year because usually you can glean a lot of very valuable information out of this report. Now I'm going to blow this up a little bit. Now I'm not going to go through this entire report because it is rather lengthy at about 48 pages. What I really want to focus on today are what are the key findings from the report. And I want to go through the conclusion of the report just to give you guys the basics here. So here are the key findings from the report here. And I'm going to read through these. So net interest margins were cited as the most important external risk facing community banks in the 2025 CSBS annual survey. Core deposit growth ranked second among surveyed banks, followed by economic conditions, cost of technology, and the cost of funds, i.e., in other words, what they're paying for deposits. So again, net interest margins. So basically think of that as profit margin. You're most concerned with maintaining your profit margins, increasing your profit margins, and then core deposit growth, just growing your deposits was the second biggest concern, followed by economic conditions and the cost of technology, i.e., and then also I think kind of goes the core deposit growth also goes into your cost of funds. So again, these are the big primary concerns for community banks right now. Regulation, which had been a top external risk in last year's survey, fell to the sixth spot as community bankers expressed less concern over regulatory burden amid a changing political landscape. Yeah, obviously, Biden regime was just over the top on bank regulation. Now they've gone out. The Trump administration has come in, really eased up and taken a more practical approach. And that has really eased for the moment, a lot of I'm not going to say the burden, I'm going to say more the regulatory concern, the concern of regulatory overreach, because I think that was really more the issue with regulation itself as opposed to regulatory overreach. Once again, cybersecurity held the top spot among internal risks facing community banks. Indeed, the share of community banks reported this as an extremely important risk. 58% surpassed all other risks, both external and internal, by a healthy margin. Technology implementation and related costs ranked second, while credit replaced liquidity in the third spot. Bankers continue to report inflation-created challenges as persistent but manageable. While bankers see the greatest impact from inflation on the cost of deposits, followed by personnel expenses, more respondents cited the effects of inflation on operating expenses in this year's survey. Community banks continued to cite other community banks as their largest competitor in 7 of 9 product and service lines, and reported local regional banks as their primary competitor for payment services and in-market non-banks as their top competitor for wealth management and retirement services. Payment services competition showed the largest year-over-year change, with competition from non-banks without a physical presence in the market increasing by 7 percentage points. Non-banks are now the second highest form of competition in this area for payment services. So think of like Chime, Block, what used to be Square, PayPal. There's a bunch of them out there. Respondents that received is seriously considered accepting an acquisition offer doubled between 04 and 05, rising to 12%. Inability to achieve economies of scale was cited as the primary reason for consideration. Very interesting. On average, respondents reported that adhering to safety and soundness practices accounts for the largest share of total compliance expenses at 27%. Money laundering and consumer protection standards maintained the second and third largest shares at 25% and 23%, respectively. Most respondents indicated they would support changing the current deposit insurance framework with targeted unlimited coverage and increased coverage scoring the highest among alternative solutions. Of those survey respondents favoring an increase to the deposit insurance limit, the majority, 72%, viewed a new limit of $500,000 as appropriate. So very interesting there. According to this year's survey, credit and debit card fraud was both the most common type of fraud reported and the largest source of dollar losses, followed by check fraud and identity theft and account takeover, respectively. Together, these three types of fraud account for nearly 88% of total fraud cases and more than 80% of dollar losses. Wow, yes, so a lot of very interesting there. So a lot of really good tidbits there. Now let's go down. There's a lot of charts and graphs in here, a lot of really good stuff to look at. Again, it would be great if we, had a lot more time. But again, I'm just trying to give everybody an overview of this, and then you can kind of go down and figure. You could kind of take a look at this stuff in more in depth if you want to. But let's read through the conclusion here. So this 12th annual survey of community banks provided community bankers with an opportunity to share their views on the most pressing topics around the banking industry today. For the 8th consecutive year, cybersecurity topped the list of internal risks facing community banks. With the rapid pace of technological innovation and adoption, it was no surprise that community bankers viewed technology implementation and related costs as their second highest internal risk for their institutions, and the overall cost of technology as essentially tied for the third highest external risk. When asked about challenges to implementing new technologies, community bankers viewed every aspect of implementation as more challenging relative to the 2024 annual survey. However, survey respondents also saw opportunities with respect to technological developments, including expanding mobile banking services, fully integrating loan processing systems, and adopting cloud-based core systems, topping the list of promising advancements. While community bankers expressed little interest in adopting cryptocurrency services, the survey period ended just prior to the signing into law of the Genius Act. This will surely be a topic of discussion in the banking and payments industry in the months and years to come. As shown in the recent readings of CSBS's Community Bank Sentiment Index, community bankers have become more optimistic on the regulatory climate, a sentiment that can be seen in the 2025 listing of external risks facing community banks, where regulation slipped from a near tie for the first last year to 6th this year. Indeed, the share of bankers identifying regulation as an extremely or very important external risk fell 13 percentage points year over year to 75%. While views on regulation shifted notably since last year's survey, risks related to net interest margins, core deposit growth, and funding costs were again ranked high in importance by community bankers, a consistent result year to year. Bankers did express somewhat less concern on both core deposit growth and funding costs relative to the 2024 annual survey, likely reflecting the decline in short-term interest rates and relative easing in competition for deposits. Nevertheless, with heightened economic uncertainty, at the time of the survey, community bankers indicated more worry with respect to economic conditions and ongoing concern related to credit risk. Community banks continued to view other community banks as their top competitor across most product and service lines, but this year's results indicated growing competition from non-banks. In particular, non-banks without a physical market presence were cited as the second most common primary competitor for payment services, while the primary competitor remained larger local banks. In addition, community banks viewed non-banks with a physical market presence as their top competitor for wealth management and retirement services. These results indicate the ongoing competition the community banks face across the broader financial services industry, a theme likely to continue in the years ahead. Fraud continued to be a significant source of concern for community bankers. They frequently detailed specific fraud challenges in the comments section of the survey. To better understand the fraud challenges faced by community banks, the 2025 survey for the first time gathered information on common types of fraud, as well as the dollar losses associated with each type. The findings were very eye-opening. Community bankers reported that credit and debit card fraud was both the most common and the most costly type of fraud, followed by check fraud, then identity theft and account takeover. Indeed, comments from community bankers reported the growing incidence of AI-generated voices used in fraud calls, but also the ability to leverage AI to identify and therefore reduce fraud going forward. These examples highlight the tension between the costs and opportunities related to technological innovation. Findings from the 2025 annual survey provide valuable insights into opportunities for community banks and also the pressures on the community bank business model. Historical survey results can be viewed on the CSBS website. These results continue to demonstrate that community bankers remain resilient despite myriad challenges over the years through financial crises, changing regulatory landscapes, and even a global pandemic. Community bankers have endured serving their customer bases and remaining relevant in times of rapid change. So, and then after you get past that, if you go scroll a little down the report, it has transcripts of interviewed bankers. So it has 2025 5 questions for 5 bankers, and then some of these were really interesting. Again, I'm not going to get into all the different questions and whatnot, but if you want to look at the report and dive into some of this, I think that again, this is a phenomenal report with really solid information in it. So, and I do have a link to the report in the description down below if you want to go check it out, which I hope you do. But obviously, profit margins continue to be a big concern. The concern for regulations dropping a little bit. Cybersecurity, a big deal. And then obviously debit card and credit card theft and losses, very big on the minds of community bankers out there right now. So I will wrap this up by saying if you like this episode, please make sure to like, share, and subscribe, as that really helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. I thank you for listening, and I will see you again real soon.